Olaf, welcome.
Hey, Ash, thanks for having me.
It's a pleasure to have you here. I've been following the work that you guys have been doing at Polychain Capital for years, and it's great to get to finally sit down and talk with you about the many things that you've been watching. Uh, let's start off a little bit. You have an interesting journey in the space. How did you get involved in crypto, and how did you come to be where you are today?
So it was the summer of 2011. I was going into my senior year of undergraduate studies, and a friend shared with me an article about Bitcoin. And I pretty immediately was sort of rocketed down the veritable rabbit hole, became really, really obsessed with this idea of internet sovereign money, and this sort of a community-owned money, so to speak. And basically was going to my senior year of studying. So I wrote my undergraduate thesis on cryptocurrency later that year. I joined Coinbase as the first employee, basically my first real job out of school, and was part of scaling that business substantially from the three of us in a residential apartment up to about 150 to 200 people. Went through Series A, B, and C at Coinbase. During most of that time, I was the head of risk, so focused on security systems, anti-fraud, and operational things like customer support and investigations.
What an incredible perspective to watch the opening years of this space from.
Yeah, I mean, it's, I've never felt like I've been watching it. I feel like I've been just in the fray. Yeah. And, watching Coinbase scale really taught me a lot about what it means to operationally go through sort of hypergrowth at a startup type business. And, watching the technology side of the cryptocurrency landscape continually evolve that whole time as well. And so it was in 2016 that I decided to leave Coinbase after about 3.5 years there to launch the Polychain Fund.
Yeah. So your background was on the computer science side.
Yeah, I mean, my background really is cryptocurrency. I know I don't have some, special relevant background before getting into cryptocurrency. Like I was a college student.
And then you got to go through the scaling and also the fundraising process of the VC process with Coinbase.
Yeah, I think at Coinbase, learned a lot about what it means to use equity financing to scale a company ahead of achieving profits, and also what it just means to organize a team. I mean, 1 year after I started, I had a team of 43 people reporting to me. So we were high. Just for my team, it's almost one person a week as far as scaling a team, and learned a lot about kind of organizational design and how to best handle when you have a business that's doing so well that it's causing real problems for the business, which is like the best startup problem you can have.
Right. So when you founded Polychain, something like 95 or plus % of the market capitalization of cryptocurrency was in Bitcoin alone. When you were starting up this business, what was your thought process about where the value proposition was going to be?
So this was kind of the core big insight that led to kind of the name Polychain and the whole idea of our firm. So it's really two things. One is in the market, I felt that people understood Bitcoin, this idea of a sort of internet gold or internet sovereign money, but
what we're showing you here on our YouTube channel is just the tip of the iceberg. No matter where you are in your financial journey, whether you're a beginner just looking to break into the market or a financial professional looking to up your game, Real Vision has something for everyone. Every day, our team of expert journalists provides in-depth analysis, written reports, access to live streams, and access to our community, The Exchange, where you can interact with people just like you from all over the world. For just $1, you can unlock all of this and more at realvision.com. Try our Essential tier. If you like what you see, it's only $20 a month thereafter. So click on the link in the description, go to realvision.com, and see what you think. We look forward to seeing you there.
People were massively underestimating how much, when you add computation to this sort of blockchain structure, how much that unlocks new types of human organizational structures, capital coordination, and just new use cases. So some of the really basic ones that are unlocked by that are, for example, assets that settle on blockchains. So they sort of work the way Bitcoin works, but instead of having a free floating price the way Bitcoin does, they can be pegged to the value of an asset that's not on the blockchain. So for example, the US dollar or the S&P 500 or, really anything you could ever come up with. You can have these assets that are pegged to those values and settle on the blockchain like Bitcoin does. So that means you have mobile-to-mobile global payment systems that anyone in the world can interact with without a bank account. All they need is an internet connection. And you really have the ability to issue and settle, arbitrary assets all using software.
Right.
So that, I felt that, most of that was being pioneered in 2016 in the Ethereum community. And I thought that there was a lot going on there that the market sort of didn't understand and was maybe mispricing, just because it is somewhat technically complicated. And a lot of the use cases for how those systems can be used are a bit blurry, right? When you're investing in open protocols, open platforms, it's very hard to predict all the myriad of ways that developers will use these to build value. And so this felt a little bit like the early internet, whereby it's hard to predict all the big websites that will become hits. However, you can understand the internet's architecture and understand that, there are going to be very big websites, even if I don't know exactly what they all are. Which as an investor, I think is a very interesting place to be, because you have to have faith that the architecture will lead to novel applications that are sort of unprecedented and impossible before this new architecture. But you don't always know, it's going to be Wikipedia, YouTube, and Facebook. I think it's hard to see that kind of stuff in the 90s.
Right. It's interesting in talking about novel applications. This is about the time that I became aware of the work that you guys were doing at Polychain. And it was one of the major, I think it's fair to say, aha moments that I had in the cryptocurrency space. I think it was probably in the late summer or early fall of 2017. You'd famously been on the cover of Forbes magazine a few months earlier. And I was having a conversation with one of my colleagues at CoinDesk, where I was a markets reporter. And we were talking about Web 3.0 functionality. And I think it was one of the guys I work with said to me, listen, I'm not really doing a great job of explaining this. You need to call the guys at Polychain Capital and talk to them. They're the experts in this. They really understand what's going on. And I had a call with someone from your shop. And I remember walking out of that conversation completely transformed from where I'd coming into it. I had a background, obviously, as a financial reporter. I understood Bitcoin. I thought I understood Bitcoin as a use case of digital gold. I thought that was pretty clear. And I think I understood the medium of exchange functionality. So I got store of value. I got medium of exchange. What I didn't understand walking into that conversation were the myriad new applications that were going to come out of distributed systems going forward. And I think it was Filecoin, the use case for Filecoin, that really caught my attention just as a metaphor for some of the things that were possible in the emerging Web 3.0 technologies. Talk to me a little bit about where your view is about Web 3.0 distributed systems. You've talked about the distinction between an ownership web and a user-owned web. I think it's really a fascinating topic.
Yeah, so one of the ways to think about it is Web 2, as in the existing web we have today, is mostly very large platforms where the users of those platforms gain value from the other users of the platform. This is often called network effects, right? I go on Twitter because of other users of Twitter. I don't exactly buy a good or service from Twitter Inc. per se. It's mostly about the network of other users. And this is how Instagram works, Uber, Airbnb, Etsy, eBay, LinkedIn, these are most of the very big Web 2.0 companies. Is you host a platform, you have users join and accrue value from the other users, but all the value extraction happens by the platform owner, even though all of the users are providing the value for the other users.
Right.
So at a high level, a lot of what people are going to use blockchains for is disintermediating those centralized platforms that extract value from that underlying user base. So in a very simple example, imagine a marketplace like eBay, where someone can post a good for sale and somebody else can bid on it. eBay in that model provides a very narrow sort of thin software system to help coordinate buyers and sellers. And it attaches a few nice features like a reputation system. Has the seller sold 100 items or 1,000, and what were the ratings of those sales? And those are the types of things that you can automate with software and sort of remove eBay as the middleman. So this sort of automation of the centralized marketplace or coordinator model that's so prevalent with Web 2.0 platforms is one of the ways people talk about how this concept of a Web 3, where the users are really more so the owners of that platform. And it's not as much this value extraction model by a centralized platform owner that really isn't always actually aligned with the users. I mean, the classic thing is, the platform owner actually wants to add as many advertisements and things like that as possible to the underlying platform experience. And that only benefits the platform owner, but it hurts the entire user base. And so you have this kind of equity cap table of owners of the platform that are radically divorced from the value that all the users of the platform are gaining. Whereas in a cryptocurrency system, so, very simple example of Bitcoin, there's no Bitcoin Inc. or Bitcoin LLC that's extracting value from the system. All of the value of Bitcoin is held by the owners of the Bitcoin system, who are, this massive, massive group of millions of people all around the world. And so when you automate a lot of that sort of marketplace interaction, or the first use case where we're really seeing these kind of Web3 apps, so to speak, emerge is in financial applications. So things like lending protocols or things like order books being automated with software, you remove that middleman and basically return ownership and value accrual to the users, who are actually the ones providing value in the first place. So, I think the case where we've seen a lot of success, for example, is in order books, right? Traditionally, with a financial exchange, you send assets to the exchange and it sort of hosts an order book and you can trade. But that exchange is going to extract fees, and that exchange is sort of a private company based in some sort of jurisdiction. In this sort of more automated software-based version, all of that exchange and order book logic is actually embedded in the blockchain in what's called a smart contract. So rather than this being just a payment from point A to point B, you can actually encode more complicated financial logic in the blockchain, and then arbitrary people from all around the world can interact with that contract. And so that contract can have all of that financial and order book logic embedded inside of it, and it can create a two-sided marketplace where people can buy and sell goods, and you basically have a very liquid order book. But that entire thing is purely automated with software. There's no business entity or legal jurisdiction anywhere. All of that financial logic is embedded in the blockchain. And so, if you view Bitcoin as sort of this bootstrapping of like internet-based gold, the next step that we're entering before we get into a fully fledged sort of Web3 universe, so to speak, is this decentralization of all the financial services to use that sort of internet gold.
Yeah. And we're going to talk a little bit more in detail about DeFi in a few minutes, but it's really impossible to overstate the importance of the point that you just made about the decentralization of big tech companies and the potential. This is really 400 years of joint stock company history being turned on its head.
Yeah, I think a lot of what people underestimated is how much blockchains are not just sort of turning monetary systems into software and sort of a predictable algorithm, sort of. But also blockchains have the ability to automate a lot of the relationships between humans that create sort of the modern corporate structure. Right. So this ability to pool capital, have it be collectively managed by a group of sort of investor owners, and then have turnover of secondary shares, right? So you can kind of constantly transfer ownership of that corporation in secondary markets. And, you have the ability to issue new shares and sell that for additional capital and everything. all of those sorts of behavior can be embedded using software onto blockchains. And what that means concretely is that we have these sort of internet sovereign, what look and feel a little bit like corporate structures. But there, again, is no legal entity, and there's no specific geography in which this is located. It's sort of all native to the internet. And it allows people from all around the world to coordinate capital and sort of manage that capital as they see fit, much in the way that a corporation might coordinate capital and have shareholders that can direct those resources. So I think a lot of these financial instruments that are embedded in blockchains, not only is that sort of automating a lot of this centralized marketplace or centralized financial service type model, but the actual capital structure that sort of supports and sort of owns that is also a blockchain-based system. So it's not that you have, I think the part that's really hard to wrap your head around is it's not that eBay is competed against by another business that's also that uses a blockchain for cost savings. It's actually that eBay is competed against by pure protocol systems, where there literally is no legal entity anywhere. And that's what makes a lot of these systems so unstoppable. It just feels to me, having been in this a long time, it's just sort of inevitable. It's just a matter of the technology getting there such that it's secure and scalable, and then the appropriate abstractions so we can onboard end users.
Yeah, and that really is just a truly enormous paradigm shift. Olaf, if you could walk us through what that might look like practically, say 5 years down the road, when there are these truly decentralized, distributed, autonomous organizations that are operating with real customers, what might that feel like, look like?
So I can tell you what it looks like today, because we're actually at Polychain, I think the biggest investor in the world probably in a lot of these DAO-like systems. And when you say DAO, this is an DAO, decentralized autonomous organization, which is sort of a catch-all description of these sort of internet sovereign corporate structures, right, where people are coordinating capital and there's sort of ownership units that represent an interest in that. So we, have been seed investors in, for example, a couple of lending systems. One was called MakerDAO. The other is called Compound Finance. Yeah. Both of these are blockchain-based collateralized lending systems. So what that means is if I want to borrow money, I post collateral, and this is actually held on the blockchain. So it can be visibly seen, the value of that collateral and how much collateral there is. I borrow against that collateral. And the great thing about this system is it's extraordinarily scalable, and there's no concept of identity or geography or legal contracts anywhere in the system. So you can do, it's kind of remarkable. You can do a $10 million lend or borrow against a counterparty where you don't know who they are, you don't know where they are, you don't trust them in any sense of the word trust, but you can still do that contract in a highly secure manner where you're not going to get ripped off, basically. Right. It's very similar to the way that you can send a Bitcoin transaction to somebody else, and you have no idea who any of the Bitcoin miners in the world are, but you still have very, very, very strong security guarantees that that transaction will go through as intended.
And this is because the loans are very well collateralized with the underlying protocol securing this through math and physics, basically.
Yep. And so because that collateral is all on chain, you can see if that loan becomes dangerous. If that collateral value drops such that it's becoming very close to the outstanding loan, it basically gets liquidated and that collateral gets seized, but in a fully programmatic manner. Right. There's no pen and paper legal contracts here anywhere. And
so you don't have to sue to get the collateral. It's literally it's released on chain programmatically.
There's no, I don't think you could, it's hard when you try to blend these systems with traditional legal apparatuses. Right. It's very tricky because it's like, what's the jurisdiction? And really who even, Compound is not a business.
Right.
It's just it's like Bitcoin. It's like saying I'm going to go sue Bitcoin.
Right. I'm going to go sue. It's like saying I'm going to sue TCP/IP.
Yeah, I'm going to sue the internet. Yeah, exactly. It doesn't work quite like that. And so,
you've hit on this really critical point here, which I think is one of the things that traditional investors struggle to get their heads around, because there really are no direct parallels. And that's challenging, I think, sometimes for people in traditional finance to understand.
I totally agree. And this has been one of the challenges that a lot of people have faced investing in blockchains is they are, in general, most very successful venture investors over the last, call it 15, 20 years, have made their money investing in Web 2 platforms.
Right.
And that Web 2 platform model, every single business I just explained, they all have the exact same model. It's a different underlying service, but it really is identical. You're matching basically a buyer and a seller, or like a content creator and a content consumer. You're basically running this big liquid two-sided market for drivers and passengers, or houses and renters, and you own the platform and you take fees or you service ads, right? But every single very big web company over the last 15, 20 years, pretty much they all have this model. Not every single one of them, but most of them do. And I think that many modern investors sort of learned that model very well because it's what they know and it's what made money for them. Then when they look at blockchains, they're looking for that model again. But the problem is it doesn't exist. And the whole point is that it doesn't exist. It's actually sort of the opposite, in that the data layer is sort of burst wide open. Any developer in the world can append or alter these underlying services. So it's all open source, right? If I, as a developer, think I can improve the Compound protocol, I can, like from my dorm room, copy that code, alter it, and redeploy it to the blockchain and say, hey, I just launched my version of this. It's got a different name or whatever, and it works differently, right? So this ability to sort of infinitely remix financial services, it means that we have, financial innovation happening at the speed of open source software development, right. Which is sort of the as far away as it's on the opposite end of the spectrum of traditionally the speed of innovation in financial services.
Right.
So we're really going through this sort of economic renaissance of iteration in these financial services models. But to continue finishing your question about Compound, the really interesting thing about that Compound underlying contract system that allows people to lend and borrow is that it actually is sort of owned by this token comp, right, that has a massive base of tens of thousands of distributed holders. And so that base sort of looks and feels a bit like a corporation that owns a financial product. But both the corporation itself and all the relationships between the people, as well as the financial product itself, are defined not with pen and paper legal contracts, but with pure software contracts embedded in the blockchain. And so that, that is when you say what will DAOs look like, I can tell you what they look like right now. And the Compound DAO is worth over $1 billion. The Maker DAO system that I mentioned is worth, I think, something about like $600 million. And there are many other DAOs that are worth, in this kind of like hundreds of millions to single-digit billion range. So it's still nascent, but it is not tiny. These financial services, businesses. I hesitate to use that word business, but it's sort of coordinating capital and coordinating humans around the management of that financial service. This is happening today. It's just a question of how big this can be. And in my view, it can be very, very big. A lot of the vision for Bitcoin was this could sort of outcompete fiat money or outcompete gold or something like that. And either one of those outcomes is absolutely massive. Now we're talking about really like a new corporate structure. It's sort of like the invention of the C Corp is a little bit of what we're going through right now. And it's early days, but it's one of the reasons I have so much conviction in this area is that if we can achieve it, it just feels the outcome is so asymmetric, asymmetrically big relative to the risk right now.
Yeah, and when you talk about these systems that are total market or network valuations of $1 billion, if you think about comparing that to J.P. Morgan Chase, for example, 300 billion, you can see that there's a lot of runway to grow.
Yes, absolutely. I mean, once people realize that how much power there is in being based on the internet with no central locus of control, there's no question to me that this entire sort of cryptocurrency category is worth more than any individual business in the world. But of course, today, all cryptocurrencies combined are valued at, something like $350 billion. It's still much, much smaller than individual corporations in the world right now. I just think that cryptocurrency has been a massively misunderstood technology, in part because it's very technically complicated and it's fully permissionless. So anybody in the world can get involved and launch a business. Anyone can create their own cryptocurrency. Anyone can deploy a smart contract. And so that's kind of the beauty of the whole system. But the problem is, if you don't really know what you're doing, it just means there is a lot of noise in cryptocurrency. Because by nature of these sort of totally permissionless entrepreneurial environments, you're just going to see a lot happening. And so if you don't know how to cut through the gruff, so to speak, there's going to feel like a lot of noise and chaos.
Yeah. One of the interesting things about cryptocurrency is the name itself. One of the things that I find interesting about Polychain is that it says what it is right on the tin, right? It's multiple chains, and it's interesting. I also think that, one of the things that we've noticed here at Real Vision is some of the biggest skeptics of these technologies, some of the emerging technologies, are not people from the traditional finance and investing space who frequently don't really understand them. It's people who are the so-called Bitcoin maximalists who feel that the development of cryptocurrency kind of reached its apogee in 2009, and nothing thereafter shall have any material support because it was already perfect as it was. Talk to me a little bit about how you think of the Bitcoin maximalist proposition and why you are a Polychain kind of guy.
Well, I mean, just from an investment perspective, we've been around for 4 years. We've been through extreme bull markets, extreme bear markets, chop markets, flat markets. And throughout that whole time period, we have outperformed Bitcoin with our kind of crypto fund, right? So just from a pure investment perspective,
right.
I think it's empirically wrong. We have a 4-year track record at this point. I would really need some really strong evidence why this is going to stop trending the way it has been trending for 4 years.
Right.
Now, just in general, I think one of the very interesting observations I've had about the people in the cryptocurrency space sometimes, and this may be true of other categories where there are a lot of retail investors. I'm just most familiar with cryptocurrency, but in general, in theory, you would think that you would form an opinion about the world, and then you would create an investment portfolio to reflect that opinion.
Right.
A lot of what I see from kind of hardline, Bitcoin only, type maximalism view is actually the creation of an investment portfolio that then informs your worldview. And so, does that make sense? It's kind of so much skin in the game with Bitcoin that it sort of can distort your worldview about the reality of the fact that many, many other exciting things are happening here that have real big potential.
Right.
Now, listen, to be clear, I'm a huge investor in Bitcoin, and I think Bitcoin will continue to grow in value. At the same time, though, I think Bitcoin as a percentage of the value in all cryptocurrencies will continue to drop, as it has for the past 4 or 5 years. So, to me, I just think it's kind of like, are your principles informing your investment, or is your investment informing your principles?
Yeah. And as we film here, it's about 58% the Bitcoin dominance index of the total outstanding market capitalization. One of the things that you said that I found really interesting was talking about novel use cases and your interest in pursuing them. You said, I don't care about incrementally faster settlement times, which I thought was interesting. And you talk about not just for example, I've heard you speak about not just creating the next distributed Twitter, but business cases, use cases that haven't yet been thought of because they weren't possible in a non-distributed world.
Yep. And I think, again, the internet is a reasonable metaphor here, where the internet is such a radical reimagining of what is possible that in the early days of the internet, I think a lot of the way people thought about it was, oh, it's like mail, but faster. Or it's like a library, but it's easier or something, right? And again, it's just human nature. We're always going to be trapped in the paradigm of what we know and understand.
Yeah.
It's very hard to say, okay, there's this big market out here, and we're just going to call it the unknown unknown. Like, we don't know what it is, and we don't even really know what we don't know. Like ideas like Wikipedia, the idea that a website where anyone could create any topic and then anybody in the world could write about that topic, that could cover the world's knowledge, it just seems very counterintuitive. And yet, in hindsight, it's sort of obvious. Like, oh yeah, I use Wikipedia every day, to just find out information.
And who would have bet that it would have outperformed Microsoft's proprietary offering for which they were charging money? I don't think any economist in the world at the time they were founded around the same time would have cut those products and would have bet on Wikipedia.
Yeah, exactly. And so it just, for me, it is, what I mean to say is that when you're investing in open platforms where entrepreneurs can build anything and it's totally global, and you immediately launch all products to a global user base also. So the distribution is very powerful, right? I think it's very hard to predict the things that will go well. And so what people tend to lean on is efficiency improvements on existing business processes or existing business models that they do understand. And so payment settlement is a category people understand. Trade settlement, also a category people understand. Listen, the ACH protocol that governs payments in the United States from bank to bank is based on clearing checks, like paper checks, and it takes 2 to 3 days to clear a payment from one bank in the U.S. to another bank in the U.S. And then it can be charged back for something like 60 days.
Right.
It's a jokingly bad system. Nobody thinks it's a good system. Nobody thinks it's modern. And the entire wave of like computers and then software and then the internet still hasn't really made its impact on improving that system. Like It still literally operates, basically manually and as if it's clearing checks. And
it's amazing. I spent a bit of time working in the back office of Credit Suisse and some other banks, and it's extraordinary. These legacy technologies like ACH for net settlement and payment, the Swift messaging system, even Fedwire on the gross settlement system side, incredibly antiquated.
Yeah, exactly. And so I think it's very easy to see how blockchains could improve those systems. You're basically taking all of that legacy manual logic and you're putting it onto the internet and having it automated, right? So there's no question that there's massive efficiency improvements for things like trade settlement, payment settlement with blockchains. But it's completely missing the big picture.
Right.
It's kind of like saying, yeah, the internet was faster mail. It really was. But you'd be completely missing the big picture if you thought that's all it was. And so investing in these platforms and protocols that can lead to those unknown unknowns. These exotic business models that are sort of hard to predict. A lot of the ideas we see on the internet today, they seem obvious in hindsight, but they were not obvious when they were created. These are very big businesses, things like Facebook. It's kind of, in hindsight, this idea of a social network where everyone has a profile and you can share images and text just seems kind of obvious. But I really think it was not obvious back when Facebook was founded. And it was even less obvious in the 90s when, fundamental internet infrastructure was being built.
Yeah.
So
and also not the first iteration to succeed. For those of us who remember Friendster and MySpace, it took some iterations to get there.
Yeah, exactly. And so I think that, it's important with blockchains to sort of understand architecturally why this is unlocking a new type of like expression, and it allows thousands of entrepreneurs all around the world to come and sort of permissionlessly build on this, much like the internet. And that's why we see so many radical experiments executed on blockchains that are sort of hard to wrap your head around. It's because people are natively taking advantage of this new system to build something that's sort of uniquely enabled by this new technology. It's not just a faster, better trade settlement system. And so, for me, as an investor, you need to keep an extremely open mind when you're investing in open protocols.
Yeah. Talking of protocols and Web 3.0, for people who may not have heard of technologies like Polkadot and Cosmos, what are the goals of some of those systems, and where are they today?
Mm-hmm. So a lot of the goal of more modern blockchains, like since Bitcoin, is the ability for developers to express more complicated logic that executes in that same highly secure environment that Bitcoin transactions settle in. So this premise of Bitcoin is that if I send Bitcoin from point A to point B, it's an extremely secure payment mechanism where I don't need to know who point B is. I don't need to trust point B. B doesn't need to trust point A. All we need to trust is the security parameters of the network as a whole, which are extremely robust. So Bitcoin as a whole is sort of hack-proof, right? So once you have this sort of hack-proof environment where you can do financial, things like payments, the big breakthrough of Ethereum was, what if we use that same hack-proof environment for arbitrarily complex computation? So rather than this just being about payments, what if it could be about escrow and trading and lending, and those are and crowdfunding, right? Asset issuance, right? Those are all the sorts of things that Ethereum has been used for. But at the same time, this is a very hardcore tech challenge. It's not like all this stuff could have existed on some other system. Ethereum, when it was launched, uniquely enabled the development of all these sorts of things. One of the problems, though, is scaling a massive distributed system with tens of thousands of nodes, all verifying all of those computations by anyone in the world trying to use that blockchain is a very hard scalability problem. So Ethereum today, when you look at all the services that have taken off, it's really primarily limited to mathematical or financial logic. Right. It's the ability to add, subtract, compound, measure prices. It's not the ability to, for example, you mentioned Filecoin earlier, which is launching actually on October 15th. It's not the ability to serve text or serve images or these more robust, rich web-like experiences that we're used to. And so what you've seen with Ethereum is the development of these kind of math-based logic in these smart contracts, and that has really taken off. But even that use case is pushing Ethereum to its scalability limits. With these newer, more modern systems like Polkadot, you have substantially greater scalability. And in the Polkadot system, it's basically through what you might call parallelization, where instead of having every single node in the entire system verify every single computation, you sort of split it up and divide the process and parallelize the process, and then they sort of all settle back. That's a very high-level explanation of how it works. But in general, what this means is that you can express much, much more complicated logic that's verified in that same smart contract, highly secure blockchain environment. And so what it means is that with systems like Polkadot, systems like Filecoin, you're going to see much more robust, like expressive web-like services, but with this same sort of highly secure execution environment that we see with Bitcoin and with Ethereum. So we're kind of, to use again the internet metaphor, Bitcoin was kind of like email, right? Send text back and forth. Ethereum was kind of, okay, let's add images. And now we're entering the era of sort of video and streaming, right? We're just moving up the scalability of what these systems are capable of. And of course, when you increase the scalability, you massively, enlarge the universe of applications that are possible, right? The reason YouTube was founded in 2003 instead of 1996 was like a real tech reason. It wasn't, nobody thought of it or something. It was because this video encoding and decoding is a technically difficult problem. Once it was solved, this new business model was enabled. And so I think that's one of the very big things we're looking at over the next year in the blockchain landscape is more scalable platforms and platforms that enable new types of behavior like those we talked about, and how those will then enable new types of business models and applications that, again, are unprecedented.
Yeah. Talking about new types of business applications and Filecoin, if you could explain a little bit about what Filecoin is and why it has so much promise.
Yeah, so Filecoin is building a sort of automated marketplace for file storage. So right now, if you want to store files, you have to go to Amazon Web Services, Microsoft Azure, Google Cloud, and enter into a contract with that cloud provider. In the Filecoin universe, the idea of where your files are stored specifically is abstracted away, and it turns the global file storage market into one universal liquid order book, where I can go purchase files, the ability to store files from a service provider on the Filecoin network. So there's kind of two things going on here. One is the backwards looking efficiency improvements. So could Filecoin be cheaper in certain cases than existing cloud providers? And that's exciting, right? Because that's potentially a massive market. These cloud providers like Amazon Web Services are huge businesses. But the more exciting thing for me with Filecoin is Filecoin, because it has a distributed file service, file delivery architecture that it's built on, allows for smart contracts to reference files for the first time ever. So right now, these Ethereum-based smart contract systems, any really contract system that's embedded in a blockchain, right now it can't reference centralized servers. It doesn't. You can't have like compound finance, the smart contract, engage in a legal pen and paper contract with Amazon Web Services.
Right.
Like again, it's this legal entity problem. Bitcoin, the network, can't enter into legal agreements. But these smart contract systems can request the Filecoin network for file storage or retrieval of files. So for the first time, you have smart contract systems that can deliver files. And so that to me is going to, and this is text, image, whatever it might be. And so that to me is what's so exciting, is again the sort of unknown unknowns about what will developers be able to build when you combine file storage and file delivery with this smart contract logic. And my prediction is that we will see use cases that are beyond just financial services, what we see in Ethereum today. We will actually see more of these, like, as you put it, Web3 type applications that are expressive and have more of a traditional web-like user experience.
Yeah. There are three things about what you just said that I think are fascinating. The first is the idea of talking about a global, fungible, liquid market with an order book for storage. Fascinating concept. The second is the point you just made about the legal entity problem being solved by being able to make calls against a truly distributed storage network. And the third is thinking about the nature of the paradigm shift. This may sound a little bit crazy to people who are listening today, going, I'm going to rent out storage space on my son's friend's phone for. But when you think about this, right, it wasn't all that long ago where the idea that storing corporate data on Amazon Web Services or Dropbox would have seemed completely insane. Cloud services for storage architecture was a crazy idea as recently as probably 15 years ago. Every company, small, medium, and large, had a file server somewhere that held their corporate proprietary data, and no CTO would have allowed their data to be stored in the cloud. Massive paradigm shift secured by physics and mathematics.
Yeah, exactly right. And I think people often, underestimate how much, software moves very, very, very quickly because there's no upfront cost, the way that there is with hardware or manufacturing. You have this very, very fast iteration in the world of software. And, these blockchain systems are pure, I think one of the fascinating things is that they're pure software systems. And I think a lot of the time I call a lot of the cutting edge development in cryptocurrency kind of the rocket science of software. Like I really think it's the most hardcore software engineering happening in the world today. But those pure software systems lead to massive physical infrastructure deployment. Right. The world of Bitcoin mining, I mean, go look up some pictures of, some of the largest mining facilities in the world. It is remarkable, the physical infrastructure that has been propped up to support this decentralized protocol system, all because of incentives built into the software. And with Filecoin, you're seeing the very same thing. So, for example, in general, these service providers that store files in the Filecoin network are called miners, right? It's sort of like in Bitcoin. The Filecoin mining infrastructure build out in China right now is unbelievable. The network's not even live. And the amount of physical infrastructure that has been built to support mining Filecoin is honestly unbelievable. So I think that it's just this remarkable thing where blockchains are like these pure software mechanisms that actually lead to real, it moves away from the world of bits into the world of atoms and actually has this massive coordination effect and physical infrastructure build out without having to actually go do that. It's just a software system that coordinates humans to go do it.
Yeah, and that's fascinating. And one of, I think, the most underappreciated aspect of blockchain technology is the incentivization structure. Effectively, blockchains are distributed networks in the same way that capitalism is a distributed network. You have the laws of supply and demand. You have a demand for a certain build out, and it comes online in an uncoordinated, decentralized way. It's fascinating.
Yeah. And I think that the types of things that blockchains are coordinating humans to do will get more and more complex and sophisticated over time. So this, not to get too sci-fi, but these ideas of sort of blockchain-based corporations, eventually you get to things that almost look and feel a little bit like internet nation states, where you kind of have everyone opt into a monetary system, and then there may be all these corporate services built on top of that monetary system, much in the way that we have, fiat money and corporations built on the sort of legal apparatus supported by that fiat money.
Yeah. And it's interesting. They all sort of these concepts date back to the same time. The Treaty of Westphalia, the foundation of the nation state, the evolution of the joint stock corporation. These ideas all held for centuries. And so it's really interesting to think that this is technology that can begin to, if not unseat them totally, at least begin to change them at the margin.
Mm-hmm. Yeah, I totally agree. I just think it's very foundational, and it's mostly about using economic incentives to coordinate humans and capital. Yeah. And so I think that, it's just a very misunderstood area because it is technically complicated and it is a actually new paradigm. It's not a gimmick, and it's not, these incremental improvements. It's radically re-envisioning what we think of as money or equity or, a corporation and a financial service. All these things are being radically reimagined right now.
Yeah, and so it's probably quite sensible and in retrospect predictable that DeFi would have been the first major category of applications to come online, because this is something that people in the financial community understand at the conceptual level.
Yes, exactly. And this whole category of DeFi or decentralized finance has really exploded over the last several years. We've been investing in this category since the launch of Polychain, but it really only got a name in about late 2018, and it really only truly took off in 2020. And again, though, I think that DeFi is such a big category in part because of the scalability limitations of existing platforms. Once we kind of burst open more scalable systems, you're going to see more complicated types of decentralized business models outside of financial services. It just turns out that financial services are very simple, from sort of a computational perspective relative to, streaming video or something like that.
Yeah. We've talked about a lot of the upside potential. When you think about DeFi, what concerns you the most? What are some of the things that you worry about in the space?
So I think that the pace it's moving is very, very fast. And although, I think a lot of traditional financial services regulations are well-intentioned. In tradition, regular people in general don't want rapid, extreme breakneck speed of financial services innovation. They don't want their bank saying, we found all these different ways to get yield for you, and we're going to run out and get it. They actually want kind of safety and security and a recognized brand. In traditional financial services, those are the things that matter. And I think the whole DeFi landscape has, really turned that on its head and gone the opposite direction. Let's move as fast as possible, rapid experiments. These contracts that get deployed overnight are raising hundreds of millions of dollars, literally in, 24 or 48 hours. I mean, the ability to coordinate capital in these systems is more efficient than we've ever seen in humanity. Like it's more efficient than IPOs. It's more efficient than venture financing. Like the speed at which a disparate group of people that don't know each other and have never spoken can coordinate capital resources using blockchains. I mean, it's really happening faster than we've ever seen in the world. I think that there's dangers to that. The pace of innovation is remarkable. And I think that over a long enough time horizon, that is what will show through. But there's going to be hacks and failures and misconfigurations and bad behavior along the way. So I think crypto has always kind of been like this. It moves so fast that there's like a wake of chaos at the edges, And I think a lot of this sort of mainstream emphasis is looking at the wake of chaos, right? It's looking at all the hacked exchanges, not at the success of Coinbase, right? And it's looking at, how Bitcoin could be used to buy and sell marijuana on the internet instead of how it's like this economic renaissance, right? So I just think that there's going to be a wake of chaos with the development of DeFi over the next couple of years.
Yeah. And from a purely quantitative standpoint, the two things that I think are most striking is first, obviously, as you pointed out, the speed of the capital accumulation and capital formation is extraordinary. We've never seen the like of this ever before, and that's an amazing story. And the second, on the yield farming side of DeFi, is the amount of yield that some of these protocols are generating. I think a lot of people on the traditional finance side look at that and go, well, I'm getting basically nothing on overnight T-bills. The 10-year Treasury note is yielding somewhere between 75 and 80 basis points, depending on the day of the week. How is it possible that these yields are so enormous? What is generating such high yield when the protocols are collateralized in a programmatic way? I think people struggle to understand that.
Yep. And so I think this gets into some pretty complicated financial engineering that has come out of this. But there's a very big trend around what I like to call network mining, or people call it liquidity mining, was the name you used. And the idea is, okay, we're going to bootstrap one of these blockchain-based, services. I don't want to call it a business. We're going to bootstrap one of these blockchain-based services. So like a lending service, take Compound, for example. So what that means is we want liquidity. We want lots of people lending and lots of people borrowing. And we want basically a liquid order book, so to speak, for this lending marketplace. So how could we do that? Well, one way that startups bootstrap growth is to basically hand out equity or cash. So, PayPal famously paid people $20 to sign up to PayPal, right? And Uber offered free rides, for new users or referrals and things like that. Those kind of growth hacking tactics to stimulate growth are very well established in traditional startups. And basically, the blockchain version of it is you actually have the protocol give out programmatically future ownership of that underlying system to the users of the system, basically pro rata based on the amount of capital they contribute.
These are the so-called governance tokens that are...
Yes. And so these are the comp tokens in the compound system that sort of govern and accrue value from that underlying financial service. And 50% of all comp tokens are distributed to people who put liquidity into the compound lending and borrowing pools. So you're kind of, the reason it's called liquidity mining is because by contributing to the bootstrapping of the network effects of the system, you're actually mining, the coins in that system. You're mining the distribution of the compound token. And that compound token represents ownership over that lending pool. So it's kind of like giving, I think a crude metaphor is it's like giving equity grants to early users of your service in order to bootstrap use. So Facebook, say, has this hard problem of when I'm the first user of Facebook, the site really sucks. Like there's no point. The whole premise of it is network effects. And the more of my friends that are on it, the more useful the service becomes. So one way Facebook could have done that is they could have said, we're going to give 10% of Facebook equity to the first 1 million users. And then we're going to give 5% of Facebook equity to the next 10 million users. And then 2% of Facebook equity to the next 100 million users, right? And they could have sort of distributed ownership in Facebook to those users in order to stimulate network effects, because it's actually value accretive, right? In that you're giving out sort of equity, but it's also to bootstrap a mechanism that becomes more and more and more valuable the more network effects you build. So that sort of network mining mechanism is a kind of interesting financial engineering that's happening a lot in blockchains to distribute ownership of the financial service to the users who are actually bootstrapping liquidity in that financial service. And so that when there's, in addition to that liquidity mining system, speculation as to the future value of that liquidity mining token, that is when you get such extreme yields in these systems.
And so as the speculative aspect begins to fall off, as the underlying value of the asset declines, the rate of yield will fall as well.
That's exactly right.
Yeah. And again, these are still secured with other protocols, principally Ethereum, that are used to the staking of those protocols.
Yep, that's correct. So all of these sort of, internet corporation structures, so to speak, rely on the security of the underlying blockchain in order for themselves to have security of their own contracts and capital.
Right. So as you look ahead the next 1, 2, 3 years in the DeFi space, what are your expectations? What's your outlook? And what are you going to be looking for to understand if the thesis is correct?
Yeah, I think I'm going to be looking for new use cases more than anything. We're always looking for what type of application is only possible now. It's sort of uniquely enabled by some breakthrough in sort of the research community. So we track the research community really closely in distributed systems, peer-to-peer networks, cryptography, game theory, and economics. And when there's a breakthrough there, oftentimes there's an interesting and innovative business model that comes out of that. So we track that very closely, and I'm excited for the kind of novel applications that are going to come out of this, more scalable set of platforms. So I think that, to me, the other thing that we need to see over the next few years is appropriate abstractions of all the complexity of these systems, because, DeFi is great, but sort of in a vacuum. If you actually try to go use it, it's kind of a disaster, right? You have to go get Ethereum. You have to download software. You have to interact with these contracts. It's all scary. It's all complicated. There's a bunch of public keys and cryptographic signatures. And the whole thing just feels like I'm not a hacker. I'm not ready to use this.
Yeah.
So we need appropriate abstractions to make simple things like lending services accessible to the average user. So, we need to move this to the mobile phone and also the desktop. We need to abstract away things like cryptocurrency public addresses, which are like these long alphanumeric password-like things. We need to abstract away, all of that weird complexity. And so I think a simple metaphor is, for example, IP addresses. Back in the day when you wanted to use the internet, you would log into a server with this IP address. Eventually, we got the domain name system. So you'd go to google.com instead of some string of numbers. And we still don't have, a widely adopted standard for that sort of healthy abstraction to get the end user away from like the nuts and bolts of how it all works.
Yeah. Olaf, we've blown through an hour and I've gotten through barely half of my questions. You're going to have to come back so we can talk more about the investing philosophy, how you think about that world. So much to talk about.
Yeah, happy to, Ash. I know we didn't get to a lot of my thinking about value accrual and why this whole category represents, in my view, the best investment opportunity of a generation, which is why I've been involved in this for so long. But happy to come back. Really enjoyed the conversation, and thanks for having me.
That sounds like a perfect part 2, Olaf.
Okay, awesome.
Thanks for joining us.
Thanks, Ash.
I hope you enjoyed this special episode of The Interview, the premier business and finance series in the world. However, this is just the tip of the iceberg. For more in-depth content and expert analysis, visit the membership link in the description to unlock a week's access for only $1. This dollar can change your life.